very much. I'm here to inform you about a decision that we have taken today. We have in the Commission concluded that the Belgian Excess Profit tax scheme is illegal under EU state aid rules. The scheme gave tax reductions of around 700 million euros to at least 35 mainly European companies. Belgium now has to recover the unpaid tax from the companies concerned. In essence, the scheme allowed companies to pay substantially less tax simply because they're multinationals and could benefit from alleged synergies. On the basis of tax rulings, the scheme exempted this so-called excess profits of a company from taxation in Belgium. The result is double non-taxation, as this excess profit is actually recorded profit which ends up not to be taxed anywhere. Today's decision shows that this scheme goes against EU state aid rules. There are many ways for EU countries to promote and subsidize investment also in line with EU state aid rules. I think that government should and do try to create jobs and economic growth. However, national tax authorities cannot give any company, however large, however powerful, an unfair competitive advantage compared to others. This means that national tax authorities cannot establish tax schemes that only benefit a select group of companies, in this case, multinationals. Such schemes put smaller competitors at an unfair disadvantage. They are active in the same markets. They pay their taxes fair and square according to normal tax laws. Even if there are efficiencies to be gained in a multinational group, these should be duly reflected in the actual recorded profits of the various groups' company, rather than simply being discounted from the tax base of one group company. The excess profit scheme has been in place in Belgium since 2005 and has benefited companies from a wide range of sectors. Most of the companies benefiting are European. It is also European companies that avoided the majority of the taxes under the scheme, which they now have to pay, around 500 million euros out of the estimated 700 million euros in total. So just a few words about how the scheme actually worked. Belgian law requires that standalone companies and companies that are part of a group pay taxes on profit they actually record in Belgium. But the excess profit scheme allowed a special treatment of selected companies. It enabled Belgian tax authorities to issue tax rulings to specific multinationals. These rulings artificially lowered the company's tax base by deducting so-called excess profits. The scheme assumes that a multinational the scheme assumes that the multinational make profits that a hypothetical standalone company in a comparable situation would not have made. This so-called excess profit allegedly result from the advantage of being part of a multinational groups, such as synergies and economics of scale. Under this scheme, excess profits should not be taxed in Belgium, and the company's tax liabilities are reduced as a consequence. In practice, this meant that the companies concerned did not pay more than 50% and, in some cases, less than 90% of their profits. This is against EU state aid rules for a couple of reasons. First of all, it deviates from the normal practice under Belgian company tax rules. it gives those multinationals able to obtain such a ruling a preferential, selective subsidy compared with their competitors liable to pay tax in Belgium under just normal Belgian law. Secondly, even if one assumes that multinational companies generate an excess profit, it should be shared among its group companies in a way that reflects economic reality. This follows from what we call the arm's length principle on allocating profits between a group of companies at market terms. However, under this Belgian scheme, alleged excess profit is simply discounted unilaterally from the tax base of a single group company. Finally, contrary to what Belgium claims, the scheme can also not be justified by the need to prevent double taxation. The discounted profits are not taxed anywhere else. The scheme does not even require companies to demonstrate any evidence or even risk of double taxation. In reality, this scheme gives a carte blanche to double non-taxation. According to the information that Belgium submitted, at least 35 multinational companies benefited from this scheme. We cannot name the companies at this stage because the Commission assessed and found the scheme itself illegal. We did not have to investigate the specific rulings to each company that are based on the scheme. They are automatically illegal as well as the scheme. It is now for the Belgian authorities to confirm which companies actually benefited from the scheme and to implement recovery. So there are some procedural differences in today's case to our decisions in October finding illegal state aid to Fiat in Luxembourg and Starbucks in the Netherlands. But we apply the same underlying principles regardless of whether illegal tax advantages comes in form of a scheme or comes in form of a specific tax ruling. We also continue our investigations and inquiries into tax ruling practices in all EU member states to identify and address such distortions of competition, as well as our in-depth investigations into tax rulings in Ireland and Luxembourg. We will take our decision if and when they are ready. But to root out unfair tax competition in the European Union, we need an effective combination of both legislative action and enforcement of state aid rules. Therefore, the Commission is also pushing forward its action plan for fair, transparent and efficient corporate taxation. Later this month, the Commission will present a package of proposals which aims for a coordinated and efficient implementation of good governance standard for corporate taxation in the European Union. The package is based on a very simple principle, that companies should pay taxes where they make their profits. For successful adoption of this, we of course call on Member States to play their part in order to enable us to move forward. I hope that the decision that we have taken today help us to keep up the momentum to tackle tax avoidance, not only in Europe, but also globally. Thank you.
Thank you very much, Commissioner. I see already 5 hands. Let me start here and then move to the left.
David